The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we've got an interesting day out here. Took it down to 1990 on the S&P cash. We've bounced a little bit, and not uncommon. We're going to get into the reason why, but I brought it up in the den yesterday and outlined it fully in my daily newsletter this morning about what we can expect. But I think this is a short respite, and I will give the reason why. Of course, we've got a lot of other moving pieces out here, too. Of course, probably no more important than the dollar. They've been trying to keep this thing from going higher, and by them, I meant probably the central bankers or the Treasury Department or whoever's standing in the way of this. Certainly looked like it wants to go to 98 bucks, and they tried to stop it as it was going through the high 95s and pushed it back a few times. Tried to slam it down again this morning, and it's back up to 94.83. My guess is this thing really wants to go to about 98 before we have any kind of meaningful pullback in it. Of course, gold was off 2.5%. The S&Ps are up 8 with 2.6 billion shares. So we had a lot of volume this morning. It's not like we didn't push down to that low of 1990. But there is a key factor that I think a lot of people were missing, and I will bring it up here shortly. I am digressing, though, so I will have to stop digressing and get right into some history.
There it's all just a little bit of history repeating.
On this day in 1997, the U.S. Treasury auctions off its first issue of inflation index securities, finally enabling investors to hedge the risk of escalating cost of living. Treasury inflation-protected securities TIPS. TIPS can be purchased directly from the government through the Treasury Direct system in $100 increments with a minimum investment of $100 and are available in 5, 10, and 30-year maturities. I want the opposite of TIPS. I want deflation. Protection. I don't think they're offering that, thinking that they can continue to print whatever they want and always inflate this market. What would be Treasury D? It'd be TDPS. That doesn't make a word, though, so probably that's why they don't have it. But I'd go for the other. Anyway, an interesting day out here. Everybody thinks that these things have been around forever. A lot of new products out here. And, of course, watch this market closely, up 7.5 points on the S&P cash. A lot of pushing around out here, and, well, see how things go. Of course, we've had a lot of earnings, and we're going to talk about that a little bit. First of all, Las Vegas Sands gives us a very good idea of where the money is coming and where it is not. When we look at them, if you're in Tiger TV, I've got a whole list of them. But if you're talking about Macau, the Sands over there down 14%, the Venetian over there down 25%, the Sands Macau down 14%, Las Vegas operations were down almost 4%. Sands Bethlehem, which is I guess it's a brand new place in Pennsylvania. I've read a lot of big things about it, but this thing is taken off like a weed, maybe because of all the kind of trashy places in Atlantic City. I've never been, but everybody tells me it's a very low rent Las Vegas experience, and that the Sands Bethlehem, kind of a top notch, or when the hotels are new in Las Vegas, one of the top notch ones. But up 49%. Maybe it's just because it's close to a lot of areas where people wouldn't have normally gone. Maybe after they lose their money, that will go down. Four Seasons in Macau and the Grand Plaza Casino there, both up 53%. And the Maria Sands Bay operations in Singapore up 157%. So some of these newer places getting some of the action. Of course, no one wants to really hang out in the ones in Macau so much. This MACAO is a region close to there that was much like Macau, a protectorate of the empire, as they say, and got pretty much full autonomy. But it looks like a lot of people are ducking out of the major hotels that have been famous over the last few years and hiding down here in these less well-known places and off the beaten path to escape all the Chinese communists who are wondering where all this cash is coming from, and they don't like it one little bit. In fact, we talked yesterday about, I think someone emailed me. I think that's what they did. They emailed me, and I answered it close to the end of the show, the question of whether or not Alibaba was a good investment. And I said, well, probably not right now, because everybody and their dog is hiding anything that they've bought as the Chi-Coms are trying to reassert some power, but also saying, you guys are acting kind of stupidly here and throwing your cash around, and especially if you got any of that by doing illegal things, we're probably going to march you out in the middle of a rice paddy and end your life. You'll just disappear. And a lot of people hiding out from those places. And, of course, just interesting to see the Sands Bethlehem up huge, and also this Marina Bay Sands operation in Singapore, where apparently a lot of people are going now to get away from the Chi-Coms in Macau. But interesting nonetheless. It is tough out there. It is hard for traders, and Bank of America is cutting down the pool for its big bonus by 10% compared to the previous year. According to unnamed sources, I assume those are the sources that are going to at least get 10% cut from what they're making. It has been an incredibly tough year to make money, especially if you're trading large and in size. If you are more nimble, much like the smaller animals when the dinosaurs had a problem, it is probably a lot easier to make money than it is at one of these big funds now, where you have to get out when you can, not when you have to. A lot of these people are stuck in a lot of stocks, and if they start selling them, it's really going to push the price of these things down. But as far as I'm concerned, I think the market has hit its high, and we're going to get into why here, I think, in the next slide. No, we're going to talk about Alibaba. I forgot to brought that up. If you've missed it, there are a lot of allegations flying around inside China about Alibaba selling counterfeit products on its marketplace. I don't think people really care that much over there in China, from what I can tell, for counterfeits. The people that are paying the big bucks, though, for what they think is real products on Alibaba compared to what they find in the street, which is probably 98.999% pure counterfeit, probably a little less. But there's a lot of back and forth on this. My guess is that a lot of the money that Alibaba was making was selling high-end things like Rolex watches and other things that were not counterfeit. And I think the Chinese government may have a little axe to grind in here in making sure people are not spending their money on things that they don't want them to spend their money on. This has been, the communists are trying to reassert themselves back into the economy again. I think that they see that they have a lot of problems. My guess is that there's a huge problem still to come out in the housing and real estate market over there, and they're trying to keep a lid on it as much as they can. But Alibaba down, what was it down out here? It's down 9% at 89.10 as I speak. But you've got that, and then of course Yahoo, which is getting smacked. since it doesn't really make any money other than what it makes on Alibaba, their biggest investment, off at 320, almost 7%. But my guess is that if Alibaba gets back down to about 75, which I don't think it could have a problem doing that over the next quarter, but I think you could see that maybe the CEO of Yahoo wouldn't make it into the next quarter. Right now, as long as Alibaba stays up, and $90 probably not too bad. If this thing does get down to 75, watch the long knives come out, and maybe we get Carl Icahn or somebody else to step in and start screaming for heads to roll. I always like that in, what was it? Colonel Klink. Headsville roll! Headsville roll! I'm trying to remember what it was. Burkhalter, wasn't it? In Hogan's Heroes. Headsville roll! Anyway, my guess is that we'll have a Carl Icahn-like person come out of the weeds and basically say it's time to bust up Yahoo or get rid of the CEO. We certainly had that with McDonald's last night. Nice little pop in it, with it going higher, up 4.25 today, almost 5% on, of course, that CEO getting the boot. He really tried to have that big promotion where they were 69-cent cheeseburgers to get people coming back in. Doesn't look like he's going to see whether or not that actually panned out, or maybe it didn't pan out and they canned him anyway. But it's kind of tough to see how that gets any better anytime soon. But at least they're not going down the same road, which is normally good enough for a 4 or 5% pop in McDonald's. With a lot of people short, thinking that the CEO was going to ride this one in all the way, but not. We've got, do I have enough time for this? I want to make a distinction. I brought this up many times, so I know a lot of people may get tired of hearing about it, but I think we covered one of our positions in the daily newsletter. I don't think I think we're headed down. I just thought in the daily it was probably a little bit more wise to go ahead and take our cash on this trade, as it was a long trade in the VIX. Took it at the close of business yesterday, mostly because we are in fund buying season. I don't think the market's going to go up, but if you're long the VIX, guess what? All you need is about 4 days of this market going sideways to see a fairly nasty drop in it. And I suspect that's what we're going to see. And most people don't understand that there is a difference in the equity business between fund managers and money managers. And when we get back, we're going to talk about that a little bit further. Got some email at path@tfnn.com, or you can call me at 877-927-6648, and we will talk about it when we come back, plus some big predictions for the end of the show. Anyway, we'll be back in a minute. Give me a call, give me an email, post a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we get back, one of the things that I was wanted to bring up, somebody asked me in the den, so I figure there may be some other people that haven't heard my spiel on this before. At least my take on it. And there is a thing called the fund buying season. It's the last 3 days of the month, first 2 days of the month. And it is when fund managers are, because of their charter, required to be 100% invested. Let's say that you have a fund for gold stocks. Well, your ETF says, well, somewhere in its charter, at least 80% of them in their charter will say something like, we will be invested 100% in equities of the gold sector for whatever, right? And that basically is, if it's an ETF or another hedge fund or whatever, they'll basically stick that in. And that is one part of the business. That is the fund manager. And he buys, basically he tries to buy the best combination of stocks for his ETF or whatever he can, whether it's an ETF or an open fund or anything else. Now, the money managers buy those funds for the most part from the fund managers, and the fund managers are out there hawking them, saying, you know, I've had very good results. The money managers, on the other hand, have to worry about a market crash, an Enron maybe coming out of nowhere that no one has thought of, So what they will do is hedge that ETF or that fund somehow. That is either buying S&P puts or buying something else generally, or maybe doing a long-short pair. If he thinks that one sector of technology is going to do very well, he may try to pick the sector he thinks in technology will do be the poorest at the same time frame, and they will buy a pairs trade or something like that. But the fund manager, all his job to do is get the absolute best return he can, even in a down market. So even if it's going to lose 15%, his job is to make it lose 13%, not the 15% of the general market. The money manager's job is to set up for rare events like a black swan event and make sure that someone doesn't lose all their cash. But if you go through the fund's documentation, you will find that it'll somewhere in there it'll say that 80% of the time it's the last 2 or 3 days of the month, first 2 days of the month. The rest of them tend to come around the 15th, and they tend to be funds that have a lot more to do with commodities. And I don't know why that is, but maybe it's because of the way that futures expire and the way ETFs and options expire. But that's pretty much it. So what happens if you're a big shot at JP Morgan or you're a big shot at Goldman Sachs and the market's headed down? You may buy some stuff for just a day or two. Wait until that fund buying that comes in every single month that has to, because everybody's plugged into their IRAs at work. That cash is coming in. You know that maybe $200 billion or $100 billion or $50 billion, 50 billion is probably more like it, is coming in to the market at the end of the month. Why would you let the market go down? Just buy a little bit now, hold it up, and start selling into it as the cash from those funds start coming in. So if you go back and use the correlation feature of Excel, you'll see that there's about a point and a quarter, almost like clockwork, where the market has a bias over those days over the rest of the month. You'll also see there's a little spike there on the last day of expiration. There are organic reasons why the market moves. I don't buy or think the market direction goes forever. I just know that you have to have a fairly compelling reason to be short these next few days. It just doesn't make any sense. Now, if you're short much higher, like I am on a lot of these ETFs, then you just sit on your hands. If you're in something that can die and wither on the branch by going sideways like the VIX, then probably not a smart thing to sit on your hands very long. So, you know, in my case, I didn't get the proper entry in the VIX. We ended up coming out on the green side of the trade. But, you know, if I probably had bought it maybe a little bit better, maybe I would have been compelled to sit through it. But what I didn't want to do is have a entry that I knew was not optimum and then sit through it for the next 3 or 4 or 5 days. Why this market, maybe it gets up to 2020, 2025, something like that. I think all we're going to do is go sideways for a few days, build up some energy. We're going to go down and blow out this 1990 here fairly shortly. Anyway, we'll be back in a minute. Give me a call, 877-927-6648. When we come back, we're going to talk to John about IBM puts.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We got a couple things going on here, and somebody in the den said they didn't like this market yesterday, but everything is fine today. And yeah, this is a bipolar market. Of course, I always like the song, I've seen fire and I've seen rain, because the market is like that. One day everything's good, getting better. The other thing is next day is bad, getting worse. Right now, all I suspect is we're holding the market up to get that 401k money in. And after that, we're going to be heading back down. But today, there's only one song that they play on Wall Street.
Everything is awesome.
That's right. Everything is awesome. Everything is up. Everything is good. There's no bad. And we'll take a look at it. Anyway, had a question from John. And John properly told me where he was from, Massachusetts, and told me his name, John. And so I appreciate that, John. Anyway, he's talking about maybe buying puts on IBM. And, of course, the first thing I would do is go back out here and look at how many days to cover for the open interest, which is about 4.4 days. Kind of, it's on the upside. I thought maybe it would be higher before I looked at it, but it's okay. It's not great, but it's okay for a stock that's been smacked down so far. So the next thing I'd want to do if I were thinking about buying options is I'd want to look at the historical and the implied volatility on it, on both the puts and the calls. One of basically there's several things I want to look at. I want to see a VIX probably below 15, 14 preferably, if I'm going to buy options. If not, I'll look more at going after EFT or actually shorting the equity itself. All these things are going to add up to higher premiums. The higher the premium, the harder that it's going to be to get out from underneath it and basically even be right, even if the stock goes down. But implied volatility, I like it to be below 30%. And actually, it's not too bad out here. So you got two things out here. So now the next thing is where you would want to buy the actual puts themselves. And my guess is that you have this candle back here on the, what is that, January 26th. There's a little gap underneath that, and that means that you're probably looking at 155. So not too bad up here, but you'd probably want to be, I'd like to see even this thing get into this candle of, what is it, control, what is it, control W? There it is. This high of January 26. I'd like it maybe if you could get back in there, 157.50, something like that. It wouldn't be bad. And then take a look at it there, but make sure that your implied volatilities and everything else are low. This thing has tested two previous lows, and you know the one out here on January 21st had 11 million shares. You've got 5.7 million today, so see how this thing closes. My guess is you're building up energy to go break below that, but that gap right there, can we show it? Yeah, there we can see it a little bit better now. So let me zoom in on this gap right here. That's the gap I'm talking about. I'm waving the mouse over it if you're watching on Tiger TV. But that's where you'd want to look at it. But light volume last 3 or 4 or 5 days. Fun buying. Could easily see maybe a few of these shorts squeezed out. And you'd want to see, in fact, I'd probably set alarms intraday for like $2 higher and see if this thing just doesn't spike very quickly up into that high and give you an idea that at least some of the shorts have capitulated. And if they did, if it's light volume but very sharp and tight, that would be the time probably to set the hook on buying puts on IBM. My guess, though, is you're probably not going to want to go short IBM before Tuesday or Wednesday next week. And what else do we have going on out here? That's pretty much it. We've got a lot of stuff moving, so we want to go right on to that. Probably the most important stock out here is Qualcomm. And why they did not say it, it is important to see that this thing has come back in to fill one of these large gaps. That gap actually occurred on June 25th of 2013, 25 million shares. And you know, we're back with 37 million shares into that gap. But this thing had 3 gaps, and you could almost make a case that this is a 3-gap play that came back in, and this is the 3rd gap on the way back down. So you had 3 down here, down to about 55, actually from about 63 to 58. But you also have 3 big gaps now on the way down. Now, I would like the second gap to be just a little bit bigger. But probably not a bad deal out here to think that you could go back up, and at least if you are bullish, which I am not, this would not be a bad thing if this thing bases out for a while. Now, they basically said last night that they were not going to be in some smartphones, and everybody took it to mean Samsung. There is a reason for this, and it is Qualcomm in China. It's all about Qualcomm in China. Samsung is not going to be putting their chips, the Qualcomm chips in there, because Qualcomm is refusing to give all the intellectual IP to China. There is a new law. We're going to talk about it on Friday with Tom O'Brien and the Tech Insider. But basically a new law in China that basically says if you're going to sell anything electronics that the NSA may have screwed with, we get all the source code. We get to look at everything. And to tell you the truth, I don't know how Apple's gotten around with it. If they made a deal with the devil, expect to see Apple phones for half the price in the next 6 months from Xiaomi. I can't imagine that Apple is stupid enough to do something like that. But although Qualcomm really hadn't expressly said it, I suspect this is exactly what's happened. Samsung wants to continue selling. They've got a good business of selling product in China, and I have a feeling that they don't have a problem with giving up some of the IP they have for the equivalent processor chip, which is what Qualcomm's getting hammered for today. There is their Snapdragon chip, I think it's called the Snapdragon chip, is what is really hitting them today. But these new laws in China, basically one-way door saying, give us everything you know about it, and we might let you in the door. And it is a deal where you sell your seed corn now for a huge competitor. And, of course, they got lots of cash, and they'll buy off whoever they need to buy off to make sure that nothing ever really happens, or when it does happen, it doesn't matter. But to me, Chinese pretty smart people, and we're pretty dumb. We've got some, I'd almost call them traitors in the government that are more than willing to take cash in a variety of ways from the Chinese to sell out our intellectual property. Qualcomm is not doing it. I actually think that that's a big bonus, mostly because they have the only chip that works everywhere in the world. And my guess is that somewhere along the way, Apple has been able to ignore that, maybe because so many people want it, maybe because they prevailed on the president and all the president's men to drop the hammer on China to make sure that the Apple product got in the door. But as far as I can tell, this is what's hitting Qualcomm, and that is not giving the Chinese a bunch of their stuff. So people like Samsung are not going to use their chip. But a deal with the devil is no deal at all, and Qualcomm's getting hit for it today. It's all part of the plan out there. It's all part of the plan. Well, somebody in the den says, why do you think Bob O was listed on the New York Stock Exchange? I think, I don't know how it got through government regulation, but everybody knows here that I'm not a fan of investing in any China stock. I think there is one day where we're going to all wake up and find out that they basically are sending no cash back, and there aren't going to be any dividends. There isn't going to be any money. They're just going to take it all. And they're probably going to look at us saying take it all in the same way that we won't honor our treasury bills back to them. Just say, you got a bunch of worthless paper. Yeah, so we got worthless Alibaba paper here. All those huge treasury bills you have, we're not going to give you any cash for them either. So maybe something like that along the way if I put on my aluminum foil helmet. But Qualcomm, I think you have to basically read between the lines on this, and it is probably not good for anybody, but maybe some more trade wars going on. BMO of other stocks moving out here. I don't know what that one was at. Maybe CL or CLB. Colgate Palmolive. Big move out here today. Let me find them on my list of stuff. I need to start organizing this better. Beat Q4 consensus EPS by 2 cents. Reported inline revenues. Of course, the safety trade is still important, especially this morning when everybody saw the lows being tested out here. Back up to this congestion zone that started about the 6th of January and went till this thing actually came down on volume on the 23rd. It's back up into that area. I don't know if that volume is right. I'm going to have to go check this at the break, but it doesn't look like the volume was that strong on this thing today. I'm wondering if it's right or if that's wrong. Maybe maybe somebody in the den can tell me if that's right. 690,000 shares? Huh. Maybe I should check. It looks suspect, so I will check quickly. And what do we have? Yeah, 4 million. 5 million shares. Okay. That makes a lot more sense. I don't know why that's wrong. What do you have out here? 5 million. Nice gap out here. Not a lot of range in the price today, though. 5 million. It's going to be a little light. I'm going to have to see more volume in that thing to get that to stick up at these highs. Again, when the markets go down, they throw everything down. I just think CL probably going to go down slower than the rest. And it goes back to my discussion of fund managers. You want to buy stocks that are going to hold up better in the downturn and, of course, go up faster in an upturn, and probably seeing some of that buying out there. CLB is the next one out here. Let's see, CLB. Find my list here. Reported EPS in line, revenues in line, guided Q1 EPS below consensus, and is down, headed for whale poop, lower than whale poop, which there's nothing, of course, if you understand my drift. Down on heavy volume, blew out through the lows. Let's go back a little bit farther. This thing has already gone back through the November 9th, 2012 lows, the July 24th, 12 low, and let's even go back a little bit farther. This thing's back, hadn't made it yet, but it's going to it. October 4th, 2011 low, $82.74. And that was only 740,000 shares back then. So you also have a couple more gaps even then that this thing could hit. And there's one big gap down here at about 80, what was that, 70? I'm going to say that's $74. Boy, that goes back forever, back to, what is that, June of 2010. So this thing could have a horrifically bad time, bad hair day. This thing had almost a three-gap play. This one at 130 wasn't big enough. And this one out here today, I don't know. Would have been nice to have one more big, thick, bad day out here, but not going to get it. Not going to do it. Wouldn't be prudent. So we've got Coach out here today. Nice little pop out on this thing. What do we have for Coach? Reported Q through earnings of 72 cents per share, 6 cents better than the consensus. Revenues fell 14% year over year. But nice little short position on this thing. Probably just getting a little bit of squeeze. Of course, another one that dropped the Baby Ruth in the punch bowl. How's that for mixed metaphors? I love it, don't you? Mixed metaphors for the Hershey Company and Baby Ruth. See what I did there? Anyway, down on horrifically huge volume. And, of course, so that is all about missing Q4 consensus estimates by 2 cents, missed on revenues, guided down for EPS below consensus. Basically said everything is not wonderful. Everything is not awesome. Everything is not wonderful. And, you've got a congestion zone right here about $97. So you got about $1.50 lower to probably what is support, maybe 97.5 to 95. But tough sledding for Hershey out here. We'll see how it does as it comes into support. What else do we have? NetSuite. I don't know. Maybe that was a miss. Now, NOW. To find this guy out here. Reported Q4 earnings that beat EPS consensus by a penny. This thing is breaking out. Services now. You needed 2.1 million shares. You got 2.9 already. Looks like it will close above that higher high, the February 27th, 2014 high. So there are winners and there are losers. I dislike the way this thing came up on lighter energy from the low, though. So watch out for this thing closing back below 71.80. That would be very dangerous on this. Be back in a minute.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to go right to Dan in New Jersey. How are you doing today, Dan?
Doing well, Dave.
Hopefully you didn't wait too long. This thing's supposed to pop up when they send me an IM, but it didn't. So.
Yeah, no problem. I was listening to the show either way. Okay. Hey, Dave, I got one quick question. I got the TVIX yesterday, and I'm okay to where I'm at now, but I only took half a position. Where would you add back on the TVIX or UVXY?
After 3 days, 4 days. You don't wait till fun.
Time versus price?
Yeah. I think this market's probably going a little sideways, and there's probably even a little indication that we might be in an asymmetrical triangle, which means that maybe we get a little spike out of it come Tuesday or Wednesday. I would love to see a spike on the high side of like the New York Composite, some of these others, because we're getting basically higher lows and lower highs, right? I'm showing the NYSE now, and this little pattern out here, I suspect, ends up getting tighter. But we've gone far enough in that pattern that normally what happens is you get a small breakout on one side or the other. I suspect that will be in the next few days to the upside. If this thing spikes up there, very light volume, then that's the end of this pattern, and then we continue moving down. So that's at least what I'm thinking right now. But like I said yesterday, we closed our VIX position at the close yesterday, and I think you can probably figure that you got 3 or 4 days, something like that, before you want to get back into it. But it could just go sideways, and you can, lose a lot in those. The market doesn't have to go anywhere. I'm thinking maybe 2030, 2032, something like that on the S&P cash. We're not probably going to go a lot higher, I don't think. So, okay. In fact, I didn't look in the last few minutes. What do we have the S&Ps at here? Yeah, 2012. I'm thinking that this is just, they're going to hold the market up. We're going to see a few short squeezes. If you can pick off those short squeezes, if they're short and fast, and you get maybe a handful of minutes, maybe it's up there for 20, 30 minutes or something, and you can pick these things off like a good sniper would. I think you've got some new positions, but you're going to have to probably be fairly quick on the trigger to get this next round. But have you heard me talk about asymmetrical triangles before? I
don't think so, but I do know I have got those from Bud Rolf's webinars before.
Okay, just think about putting a greater sign on the or over the top of the pattern, right? It's constricting. If it gets through about 3/4 of that to the apex of the triangle, the first move is usually the false move, about 75, maybe 80% of the time. So what you would like to see is a small spike up to the upside. You'd like to see all the volatility fall out of the VIX, and there you're going to have a supreme amount of confidence to pull the trigger, because that's always the hardest thing to do on those. It seems like you're going over a cliff in the wrong way. You have to pull it and know that you're right. But normally you get light volume. The spike doesn't last that long, and you don't have a really good risk reward in the trade, but for maybe 30 minutes or an hour generally. Most of these things are very quick. Sometimes they happen in the morning, and by the 10:30, it's already reversed, and that's it. So you're going to probably have to sit fairly close to get it right on a VIX trade going forward.
Okay. One quick question on the NYA. If you pull up like a monthly chart going back 20 years, or maybe you can touch on it tomorrow, whether you would see a next retracement and then next peak in about another 7 years, which seems to be the current time cycle.
I don't think you can predict that far forward. Too much chaos involved in the markets. Anyway,
no problem,
we'll talk to you tomorrow. Same bat channel, same bat time. Hang on for the Tom O'Brien Show.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.